All right, I'm really psyched because a few years ago, and I don't know how many people were here for this, can anyone raise their hand who saw Phil Pearlman present the ballerina feet slide? Oh my God, this is so great. There's like 4 people here. Phil Pearlman, who is he's almost a co-founder of StockTwits. He's been around for a long, long time. He's currently director of Bank of the Ozarks, which is a position that I, for one, have no idea how he got, even though he's super, super smart. He also is my Twitter avatar and one of my heroes. And there was once a billboard in upstate New York with his face on it. True story. You should ask him about it tonight. Yeah, Phil. Phil's gonna.
Yes, the thumb was there.
Yeah. Phil's gonna. I don't know what Phil's gonna talk about, to be honest, but I think it's gonna have to do with fintech and banks.
All right, thank you. Thank you very much. Oh, this is perfect. Perfect. So, the wrong way. So, I'm Hi World. That's the streaming. So, my presentation today, I'm going to talk about specifically fintechs and banks. And bank fintech, because there's so many different types of fintechs that are proliferating now, and it is an incredibly dynamic and complex ecosystem, and very exciting right now. And certainly Howard's involved in so deeply. But I'm going to focus on specifically this relationship, and I just want to say right off the bat that these opinions are my opinions alone, and not those of my employer. And my wife doesn't want to have anything to do with my opinions either. And just, she's like, whatever. Basically, there is a common sort of conventional view right now. And by the way, I may go on way over. I may take like 8 minutes. It depends. I talk really fast, completely scattered. I'm only using this screen to kind of keep me in some kind of a semblance of an order. If I get too far off track, throw a shoe at me or something, and it'll help me perfect. But there is sort of conventional wisdom that fintech and banks are at loggerheads, and that banks will be Ubered. And certainly I'm affected by my vantage point, although I sort of have, by spirit, I'm a heretic. Still at the same time, I am employed by a bank, and I'm adopting that lens on a daily basis. So it's certainly affecting my point of view. But I think that the relationship between the two are much more complex and nuanced. And so I'd like to get into that a little bit and maybe begin to thread out some of the dynamics and maybe confuse things even more. And I would love if anybody has anything to say or any questions. You don't have to wait. You can just, throw up your hands in the air and, wave them around like you just don't care. So let me just begin here. So I just want to say something about, before I begin, I just want to say something about the term fintech, okay? Because it is an arbitrary term that was sort of made up, I don't know, 10 years ago, 10 years ago, and you started really kind of hearing it, and then it's been in the last maybe 3 years that it's gotten, that the drumbeat's gotten louder, and that the investments have been, those things coincide, right? Noise and investment dollars. But fintech started thousands of years ago, right? I mean, this is the first POS device right here, the Roman abacus. There were even, the Egyptians had abacus before the Romans or whatever. China was doing it. And it was really just a way to count. And it was used by businesses as basically a point of sale device in the market. And so this is the beginning of fintech. And what happened 10 years ago is just one chapter that is abetted by, Moore's Law and the proliferation of the internet and the growth of the internet. It's a fantastic phase. I mean, sometimes you have hundreds of year periods when really nothing happens, and then you have this incredible hockey stick of change over very short periods of time. You can imagine the generation before the wheel was invented, right? And there was probably 10, 20, 30 generations in a row where not that much was happening. Agrarian society, but you really couldn't do that much. And then somebody invented the wheel, and then the next generation was like completely different, and the generation of that completely different. And so the exact same thing is happening with the internet right now. So you're getting sapiens of fintech, right? Fintech. So anyway, really old. And so then you have like, NCR is a great company now. I call it an enableizer. I may talk about it a little bit more in a couple slides. I may not. But their original name was National Cash Register. And so if you go back to late 1800s, early 1900s, they made these incredible cash registers. That was the next generation point of sale device, right? And then, now you have Square and, Clover, if you're really interested in that area. And so it's really started much earlier. We did not start the fire. We did not invent fintech, and anybody telling you about it, or anybody came up with it, coined that term, they had really nothing to do with it. They weren't born. Okay, so let's talk first about the banks, and that is the brain, right? May he rest in peace. One of the great managers in the history of old-time professional wrestling. And I'd just like to talk a little bit about the bank. And what I'm going to do is I'm going to kind of pick apart different groups as we go along. But I'm going to begin with the banks. And there are two. So the banks are also incredibly heterogeneous, right? There's so many things. The dynamic is so much more complex so that any stereotype is not adequate at all. There are, I think, two dynamics that I want to point out when talking about the banks within the context of this acceleration in the evolution of financial technology. And that is, number one, there has been this incredible secular trend, and I believe it started before the credit crisis, but certainly since the credit crisis, it has accelerated, and that is that there are fewer larger banks. So it's getting more difficult to be a smaller bank. They're getting gobbled up or they're going under, and the bigger banks are getting bigger. So that is a major shift. And the reason that's important to fintech is because there's dynamics associated with that, right? So there's like, on the one hand, a larger institution may be less flexible and may not be able to iterate as fast as a smaller, quote unquote, traditional fintech. But on the other hand, they have massive resources. So there's a race going on here. As a matter of fact, instead of using wrestling, I only use the wrestling ones because they're like more fun to look at. I mean, look at that guy, Bobby the Brain Heenan, perfect. I could have used track and field imagery as well, because it's a race that's going on right now, right? And so with the big banks, they are incredibly well funded. They have a regulatory moat that I may or may not get into a little bit more. And in addition to that, they have huge power in Washington D.C. as well, right? So they have a large, influential community there, quote unquote. I'm not going to say anymore. So those are really, I think, the most significant dynamics. And then I guess one more, and it's something I'm going to talk about it on the last slide, and that is from an organizational point of view, right? So banks, there are healthy organizations, and this isn't just for banks, it's for any type of organization. I'm sure all of you guys are familiar with this. You have really healthy organizations that are balanced and that have sort of semi-permeable membranes between the different divisions of the organization. And then you have other organizations that are very unbalanced and they are not operating in an optimal way. I think that's another dynamic. I think that pervades all of these, but I just want to mention that as well, because you do have some large institutions right now that are moving very quickly and much more nimble than you would imagine. And I think a lot of that has to do with the balance of the institution and the org, the quality, the health of the org. And I think some examples of that are, what you see Goldman doing right now, smartly with Marcus. They had zero legacy. They had no retail bank print, no branches, and they began building that, and they did it well. It was build and buy at the same time, both, and they have marched along. And I think there's some, Chase is also a behemoth, is run very well. So that's kind of a little, that's like the banks within this universe. Next, I want to talk about two groups. the destabilizers and the enablizers. Enabling is not a word, but I just liked it because stabilize, enableize. So I just went with it. I'm just gonna, if I coined it today, that would be fantastic. Oh, everybody, use that word. Start using the enablizers. Be fantastic. So let's start with the destabilizers, okay? So there's a group of young companies out there. Not all of them are small, okay? They are young. They are digital native or whatever you want to call it. And they are disrupting the market. Very straightforward. I think Venmo is a fantastic example of that. The beauty of that, anytime you see a consortium of companies that are competitors come together and try to create a product to challenge another product that's out there, you know that that company is destabilizing what's happening. So you have this incredible payments company that is still growing like wild, and then you have a consortium of the money center banks come along and build Zelle and try to market that as, and by the way, I mean, I think Zelle's doing a lot of things wrong. It would have been amazing if they had built it open right off the bat. Would have just been, that would have been atomic bomb right in the middle of the ecosystem. They didn't, not surprisingly. However, they may not be dead because they do have the pockets, they do have kind of the right idea, and they have endless runway. So they're going to keep plugging away. And the analogy that I am thinking about with Zelle possibly is Hulu. Remember, Hulu was like, oh my God, these guys are going to be terrible. They're owned by all these big companies that hate big media companies that hate each other. And then Hulu kind of like had some problems finding its footing, but then over time has had growth and success, and they have a revenue model. So I wouldn't count Zelle out yet. But I think, the stabilizer you're seeing everywhere. You're seeing them internationally. And so there's really, and I was going to bring this up before, but I'll just talk about it now. Environmentally, so outside, so you have inside, I talked a little bit about the health of the organization, that's intra-organization. Then you have sort of the outside environment, or the power of the situation, as Kurt Lewin once said, right? And different cultures and different groups of people and different law sets foster different technologies. So what we're seeing happening in China right now is crazy, right? And you have these young companies that are destabilizers, but at the same time, they're also giants, right? They're also giants, so like WeChat and that whole thing, right? And Alipay, Tencent, and whatever. Those guys have become giants so quick, they're destabilizers and giants at the same time, completely disrupting payment space. How that affects us in this country right now, maybe a much longer story given the regulatory mode, given the way our culture's set up. Could take forever. Things could change very quickly. What change happens very, very slowly and then happens really, really fast. So I have no idea what the trajectory of that might be. So that's really the stabilizers. And again, categorical models, right? I'm sort of setting up categorical models here, right? I'm talking about different groups. The categorical models are flawed by nature, right? Nothing fits neatly into any bucket, right? And so these categorical models are also fluid and messy. And as I said, some entities fit into multiple categories. So now I'd like to talk about the enablizers. And this one is such an interesting area because this one goes against sort of that conventional wisdom that, banks and fintechs are at each other, right? So you have a whole group of companies, amazing companies, young and older. So you have fintech startups that are enablizers. You have large 100-plus-year-old companies that are enablizers in fintech. National Cash Register, or now NCR, is a perfect example of that. I mean, those guys back then in 1904 were making these, monstrous cash registers, and now they're making incredibly elegant ATM-type machines, smart ATM-type machines. I was at a meeting at their headquarters a couple of years ago, and they were showing me this machine where the customer is interacting with the person live on the screen, Some of you may have seen these out in the wild. I don't know how popular they're going to be. I think there's been some studies more recently. It's like, listen, people just want to use ATMs to get cash, like 98% of what people do. So, but anyway, the technology is really cool. And then they took us to this room, opened the door, and it was a green screen with the woman who was on the ATM looking at a camera with the core information of that customer up in front of her on a large screen. It was freaking cool. So enablizers run the gamut, and then there's a small company like Alloy.co. I don't know even what they call themselves. Alloy, great little company. And they are an enableizer in that all they're really doing right now is providing a security layer, an API, so that when a person comes in and opens up a new bank account, there's this whole security layer that has to be there. It's a pain for all banks. And those guys are just solving one small, very narrow problem for the banks. Amazing, tiny enableizer. And then you have companies like NCR, Fiserv, FIS, that are these very large enableizers, been around a long time. Those are the enableizers. Startups, I didn't really have that much to say. I mean, I just talked about Alloy. I think there's a number of incredible startups out there. Really, I just wanted to use that picture. So it's the little people, wrestlers. I don't think they even would allow this today. This is going back to my own childhood. Like, how many years ago is that? I don't know. But this is this is just fantastic slide. And to just say maybe one thing about what's happening in startups, the level of variety and dynamicism that you're seeing within the fintech startup area is just incredible what's going on right now. And I think that, if I have anything to say, and this is sort of maybe a cop-out, it's sort of a common factors thing, that if the way you're going to judge them is not going to be, oh my God, they're doing this. Oh my God, they're doing, ice cream on the blockchain. Or, oh my God, they're doing whatever. The way that you're going to judge them, I believe, is the way you've judged any startup forever. And this is a great competitive advantage that I think social leverage has. And that is that, number one, the people who are involved. Number two, the product. Number three, the potential for business model disruption, because that right now is just this incredible thing. I mean, from my point of view, it's really interesting in the area of potential business model disruption within the bank fintech space or the bank finance space is a marketplace model, right? Where all of a sudden you can put yourself in the middle of the transaction or in the middle of the relationship and allow that relationship to occur without you, even though you're in the middle of it. And that's really, it's an Airbnb, Uber type of model. I think there's some really interesting things happening there. As a matter of fact, in Europe, and this goes back to, this is the stabilizer plus startup. In Europe, they don't have some of the limitations, regulatory limitations that we have here, and some of the compliance limitations. And you're seeing these startup banks pop up that are mobile native. Right, Monzo Bank, Atom Bank, N26, what's that? Number 26, a German one. And they are just like, it's Wild West out there. It's actually a really cool environment because they are not constrained and they're out there. And, I look at what they're doing and I look at their press and I look at the stuff that they put out. I'm like, we can never do that in a million years at the bank because you just can't say those things. And I'm not even criticizing that. I'm not saying bad or good. I'm just saying it's part of environment. So you may, and those are digital native, and they're building really beautiful apps. They're very flexible, and they're open. Starling is an example, one in London, where they have a marketplace, and they really opened themselves up. They've really taken to heart changes in the laws that have occurred recently in Europe. So that's a little bit about startups. How am I doing on time? Not bad, right? Okay, fantastic. So now I'd like to talk about the acquirers. And the acquirers, again, they don't fit into only one category. There's enableizers that are acquirers. There are destabilizers that are acquirers. The acquirers are larger companies. They may be financial services, software providers. They may be banks. They may be tech companies. There's a guy out there, Skinner, who's pretty, bright guy who writes about the fintech space. He uses the term tech fin. I think it's a terrible term, but what he's talking about the Googles, Amazons, Facebooks, Apples entering the financial services space. And I think where you're seeing that the most right now is in the payment space. I mean, the payment space in and of itself, I could have done 30 minutes on just that. It's incredibly fascinating what's happening there. But you're seeing these tech giants. And by the way, and so, Google acquires, how many companies a year? But what you don't think about is how many companies a year does Fiserv or FIS acquire a year? They're acquiring multiple, tens of companies a year. And what they're doing is, again, going back to that race metaphor, they are running the race, right? So they are acquiring small companies, small fintech companies that are in a very competitive environment, maybe some capital constraints. They don't have profits, but they're building something really cool. And they're saying, hey, I can buy this company and I can scale it immediately because I have this huge subscription customer base among, mid-size regional community banks. The acquirers are in a huge race. That is one of the most interesting spaces as well, because they're racing against disruptive technology. They're racing against banks figuring it out. Have I talked about that yet? Banks figuring it out? There's a possibility, you don't like to hear this, Howard, but there's a possibility that there's 2 or 3 banks out there who are figuring this out and who are not only putting a lot of money into this area, but doing it really effectively. And if that's the case, that's sort of the bearish take for fintech startups. That's funny. I never realized you were a funny guy. So write that down. I think there's a natural tendency. I just thought this was a great slide too, by the way. I mean, I pretty much just picked the pictures I thought were good and then tried to fit them. But I think there's a sense that, if you can become the next Uber, the Uber of finance, where you become an acquirer rather than become the acquired. So that's kind of and don't get me wrong. I mean, if you have an exit, or if you have a great, Plaid just got $200 million from Meeker yesterday or whatever. You're in. You guys have to settle that. It's all about price, right? Price pays. That's the alpha trends, right? Phil, we have to shut this down early. I'm very sorry. Thank you very much for your time. Classic. All right, so let's see what we have next. Okay, the giants. What Skinner calls a tech fin. Hate that name. There's others who are giants as well. So with the giants, you have the Chinese behemoths that have grown unbelievably fast. You have Google, Amazon. So let me talk about the tech giants, US tech giants, really quickly. This is just my take. The dynamic is unbelievably complicated. They're already in the fintech space. They're doing more than you think. It's not just payments. Amazon is lending money to their own, they have that marketplace. You're on the marketplace. They see you're doing well. Hey, this business is thriving. We know more about their books than them. We know more about their product trends and inventory than the company knows because of all of the Amazon knowledge that they have. Hey, I'll lend you money for this much. Amazing business for them to have. They're just they're cherry picking. So they're involved with, they're already deep into fintech. The thing that prevents them from becoming a bank, though, is regulation. So regulation is an incredible hornet's nest for every larger bank. And it forces the institution to share a lot of information. It forces them to track all the information. It forces them to monitor risk in ways that they never have before. And it forces them to talk in very, very specific ways. And so I think what you're probably seeing among the behemoths is we're wading in. We don't want to get clipped by the government and by regulators. And so they're going to go up to that. It's like going up to that, going up to that line without going over it? How far can we go without attracting the attention of a regulatory environment that we want no part of? We're a tech company. We're software. We have huge margins. We don't need to be bogged down in that type of environment. The China thing, and Tencent and the other one, Alibaba, that is just this incredible phenomenon. I mean, they might take over the world. I have no idea what's going to happen there, or they may be relegated within their sort of confined geography. No idea. It's incredible to look at those companies, though, and what they've done. I mean, they basically changed in an overnight almost how people use money. Think about it behaviorally, right? Think about all these, you could look at all these tech companies in a behavioral manner and how they affect the behavior of their customers and their users. They overnight change the way everybody acts with money and behaves with money, and that relationship at the vendor, at the point of the customer vendor. Okay, let me go. Okay, so the winners. So this is the cop-out portion of my presentation. And let me just say that I have no idea. Nothing. Got nothing for you. I got no stock tips. I got nothing. Sorry. Right. Sorry. I get that slide. It's the same presentation. Right, I know. Boo. Horrible. I have nothing for you. Can't do anything for you. All I can say is this, that there are common factors. So there's no specific, like these guys are going to win, these guys are going to lose. But there are common factors that you will see in the winners across all of these different buckets that I've created. And those common factors are amazing team, great product, don't quit attitude, and a business model. Because you're not gonna, it's too competitive environment to do that kind of, scale before you make money thing, scale before you have a business, a model that you saw with social media back in the aughts, right? You can't have that because it's too competitive environment. If you try to last too long in that environment, you're just gonna get, the heck beaten out of you by another company that is generating revenue and growing that very, very quickly. We have time for questions. Any questions? One or two. Anybody have any questions? Anybody? Yes.
Favorite wrestler, 80s.
Favorite 80s wrestler?
Well, that was my question.
Chief Jay Strongbow. I love he did a little dance. He had a little dance. It was fantastic. It's probably not politically correct anymore, but he was, I think Hulk Hogan. I think Hulk Hogan's a legend. And he went through the ringer with that, what's his face? That whole media thing that happened with it was a crazy story. Anyway, anybody else? Yes.
All right, since a lot of this is being driven by millennial investors, do you think their habits change as they age the way previous generations have? Or do you think they're going to be staying with the kind of habits that they've already been developing earlier in life?
There has never been a time in the history of mankind that behavior has been driven on such a massive scale by such a small group of individuals who are the mad designers behind the largest web entities or internet entities that exist. So you're talking about, Facebook, Amazon, Apple, Google, basically the and intermittent reinforcement is the way the old radical behaviors used to talk about it. You reward somebody one time for a behavior, and then you don't reward them the next time, and then you reward them again. Everybody's hooked, right? Everybody. Half the people in here have a phone in their hand right now, and that, I think, is a huge key in this.
But when their investment needs become more complex, and they have different needs after they're in their 40s and 50s, do they go to the big banks who can solve that complexity? Do the Fintechs keep them because they own them now? I'm trying to get you to finish the debt batch.
Well, you know what? So that's a really interesting point. It's an interesting point. So here's a behemoth that I didn't mention, right? Vanguard. Okay, the answer still depends. I'm so sorry. We're still in the war. You know what I mean? Like it's still happening right now. So there's nothing settled. But I will say this: that Betterment came out and the other one came out, Wealthfront, and they were like, oh my God, we have this cool new model. It's web native, the millennials, right? And then like 3 months later, it seemed like overnight, Vanguard and Schwab had robo-advisors and just basically, I don't know who's in the audience, but they basically outstripped and ran fast past.
It was $200 billion a year, right? The Vanguard was taking it.
$200 billion a year overnight. They were like, oh yeah, robo. We're just gonna have some developers work on this program. They're gonna, here's the application, $200 billion. And then Betterment now is like, okay, now we have to maybe make some funds that have a little bit higher fees, and maybe we're gonna get into like broker, we're gonna have people there or whatever. Okay, anybody, we're good. Okay, thank you. Howard, thank you.
I find this so cathartic between Phil's presentation and Lynette's. It's amazing.